Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're going to do some high-impact scalping and swing trading ideas. We're going to answer all your questions or anything you'd like to know, and we're going to trade that 920. We're going to scalp the 920. We're going to go over a few trade ideas that we've already submitted, and also, we're going to be looking to scalp that 5-8-13 strategy that I know a lot of you like. And right now, let's get right out to price action. You can see we have a trade brewing right here in the dollar-yen 5-minute chart. Now, if you're going to go this small of a time frame on a forex pair, you need to make sure the market's active. We can get away with this right now because the market is in fact active. So 5-8-13, a quick review of the rules. The 5 is the red moving average. As soon as that crosses under the 8 right there, which is exactly what happened, and price closes beneath all three of them, that's going to be our short signal. So let's go ahead. We're going to go ahead and sell the market. Let's see what we've got here. Let's send a few more deep and make this interesting. Go ahead and sell this market and see what happens. So we just went short. If we get filled here, it usually takes a minute with the bid-ask spread, and we're going to go ahead and go short right there. So what do we have cooking here? Well, we got a pretty darn good scalp. I believe you're going to have an opportunity here to make a few bucks. Now, 5-8-13, I know we just hit it relatively quickly. 5 crosses onto the 8. Price closes beneath all three of these moving averages, and you officially have sort of your trade, your short entry. So we went short there. Price going against us just a little bit. It's going to take a while, probably the rest of the stream, for this trade to pan out. So the real question is right now, where's my stop loss at? Sort of a rhetorical question, I'll show you, but where is it? Tick-tock, tick-tock. I'm going to go right up there with it. Previous swing high, 5-minute chart. I want to give this thing a little bit of time and a little bit of room to work. Now, if in fact we do get swept out of there, that's life. You're going to see, what do we risk? About 16 pips, something like that. That's not the end of the world. So what do we want to get out of this? Well, we want to get at least a 1-to-1. If we're interested in market structure, though, we could maybe shoot for a little bit more than a 1-to-1. So down here, let's go ahead and shoot for, let's see, we went short at 64. We're risking 16, so that puts us at a minimum of 48. Let's go ahead and put our profit target down here at 142.36, which if you guys are order block traders, smart money concept traders, this is sort of going to be the bottom of this beginning of this bullish market structure right down in there. So that's going to go ahead and be our trade. So that's about a 1-to-2, something like that, somewhere in that neighborhood, maybe a 1.5-to-1. Let's go ahead and let this thing play out for a few minutes. Maybe we get blown out, maybe we don't. But right there, our conditions are met. 5 crossed onto the 8. You got the bar closed beneath all three of the moving averages. Sell it. That's high impact scalping. Let's see exactly what works here. Let's see how this trade develops. I like it. I don't think it's a bad trade at all, but we've got to get a little bit of help. We've got to get the sellers to step in, and right now we're well within the spread. So I'm just interested in seeing how this goes for the next half hour or so. I'm not necessarily, I don't believe it's a slam dunk, but our conditions are met. Can we get away with trading a 5-minute chart right now? Yes, we can. Why? Because our bar ranges are big enough. There's enough participation. All that criteria is met. We've got an opportunity to make a little bit of money. So that's going to be our first trade of the day. I want to welcome everybody back. I wanted to get right out to that and sort of get us off and rolling on the right foot. I got a couple questions there in the live chat on YouTube. I'm going to go ahead and answer those in just a second. Yes, sir. Good to see you. Kevin Challenger, always a pleasure. Kevin. Yes, sir. Good questions, guys. I'm going to hit those right now. Lita, always a pleasure. Lita. Bobby, Bob, Mark Corp. Good to see a lot of familiar faces in here. Okay, the first question that we have is from Kevin Challenger. The CAD to USD conversion is keeping me from being able to trade profitable without it being a $1 to $2 move. The TSX data is delayed by 15 minutes, so I can't use those charts effectively either. Any suggestions? Well, I mean, what I always recommend is, Forex data feeds should pretty much be free. They should be free, so you shouldn't have to go buying data unless you're going to buy historical data. I had that question the other day. Where can I find historic data for 5 years on a 15-minute? You're going to have to either talk to your broker and download it directly from them, from their historical data sets, or you're going to have to buy it. Now, your data, you should be able to get really free streaming data. I mean, even through TradingView, I believe you get all the Forex data free that's not delayed. And you get that through the big exchanges. I believe that's just for a minimal monthly fee. I don't think it's very much if it's not free. So that's the first thing I'd say about the data. You should be able to find a free data feed that's in real time. Now, as far as the CAD to US dollar conversion is keeping me from being profitable, well, I mean, if you're going in Canadian dollars and you're trading in US dollars, I understand that's going to be an immediate problem. That's going to be almost an added spread to your spread trades. So if, in fact, you can't negotiate a way around that, be it go to U.S. dollars first and deposit in that or do something along those lines, then you're going to have to probably just swing trade. meaning you're going to have to find trades that are going to go further and really satisfy that $1 to $2 really necessary move for you to make money. It's tough because you're probably just gonna have to swing trade, Kevin, if you can't negotiate your way around that. But I understand. I mean, the forex trading's tough right now. We're getting beat up pretty good by about 5 pips on that dollar yen trade. Not really going our way. But when you take a look at 1.7 pips, the market really hasn't moved anywhere, and we're still behind. So spreads are tough, conversion rates are tough. That's always a challenge. One last question, and then we're going to get into our trade ideas and our live stream for today. Yes, sir. I'm really digging in with this 30-minute orb strategy with a 920 crossover with RSI confirmation. I'm kind of lost on the take profit and stop loss. Gold have been pretty big range in my opinion. Gold's been huge ranges. So when you start talking about maybe playing a 4-hour orb on like a spot gold, you're going to have some challenges because those are huge. What I recommend is if you're going to go to, say, a longer time frame, 30-minute or 4-hour, and you're in a market that's hyperactive, meaning not like this one. This one right here, you can see our ranges are tight, and that swing high is up there. See, it looks like it's way up there. It's only up there 16 pips. But with your orb, when you go to that orb and those ranges get really big, sometimes the best thing to do is to use that trigger bar. The bottom of your trigger bar is going to be your stop out point. And from there, if you're in a hyperactive market, boy, I'd be looking at 1 to 2s, 1 to 3s, maybe even 1 to 4s, especially the way that we've been trading in these U.S. equities indices. You could have made a lot of money trading the orb over the past couple of weeks. However, you've just got to make sure that stuff's in alignment. So if you don't want to go with a static risk versus reward, look at market structure. That can help you. But also, you're going to have to tighten up your stop loss. Instead of risking the entire range, you're going to probably have to put your stop loss right behind that trigger bar by a few pips. And that's highly risky because you can get chopped up, about as risky as our 5-8-13 5-minute chart here on the US dollar Japanese yen. I'm so confident that we're going to make a little money there. All right, guys, let's go ahead and get started with the live stream. Good questions. I always love engagement. Any questions that you guys feel like asking, go ahead and ask. Dave F19. Good to see you, Dave. All right, let's get right on out to our trade follow-ups. I like to start with these. We issued a new trade idea earlier today, and I think that it's going to be a pretty good one if we do get an opportunity to bid. And essentially, it's the Euro USD weekly chart. We're looking for a pullback right down there, right around 112.50-ish. I believe our entry point's 60 or 61. I want to be aggressive with that trade. I want to make sure that I can get in right above our 38% level and really try to get in on this bullish trend. The last 3 weeks, it was a pretty darn good uptrend. Definitely a big bullish break from right around 107 all the way up to 115. That's a huge move. That's a huge move for the Euro USD. Typically, a currency that loves to rotate. It doesn't necessarily love to move. So this trade right here, I think I've got a lot of confidence that if we do get it, we're going to have a chance to get that bid. And this would probably qualify as maybe one of our swing trading ideas. Now, it could happen relatively quickly. We could have an opportunity just to grab a bounce off of 112.50 and then get the pop. I believe we're looking for about 40 pips. That would be a baseline what I would be looking for here. You could put it on for maybe 80 or 120. But I would definitely recommend just trying to make sure that you're aggressive and you get in on this trade. What I'm saying is I don't want to miss it. I don't want to see price sort of come down to right around 112.60 and me not get in it. So I'm going to be aggressive there. That's the trade idea for today. If you want some of those trade ideas, be sure to come by the How to Trade trading room and go ahead and sign up sign up for an account and then follow me. Those get emailed out directly to your inbox. And then right here, Switch Markets. If you're interested in trading any of those ideas, check out switchmarkets.com. They can get you up and running with 1,700 markets, I believe, is what they offer. Believe me, if you want to trade it, it's at Switch. Another trade follow-up here. Trump news cycle spikes stocks, U.S. dollar Canadian bid in view. Now, this one's going to take a little bit longer to develop. What we're looking for here is a macro 78% retracement. This is the macro area, the macro zone. I like this zone because it's 78%. Now, I have 3 tradable levels on my Fibonacci retracements, 38%, 62%, and 78%. That's what I like. Those are my favorites. I don't like 50, and as you can see, if you took a position on 50 there, you got your tail kicked this month. Right there, though, we really had some great scalps on that 38%. That was the gift that kept on giving, and 62% was pretty good as well, right around 139.50. Next port of call for me. Right now, we're in a bearish market state. I don't see this one coming back at all. But if, in fact, we do get a little bit of extension, maybe not this month, but maybe next month, right down there, right around 137.25, probably going to be a pretty rock-solid long. So we're about 160 pips off of the entry. and we're looking for about 60 or 70 pips profit there, or 40 pips. These trade ideas are all lined up for you. We also post them on X. Sometimes we post them on LinkedIn. So you can check us out on X at howtotrade.com on X, or you can check me out personally, ShaneV_trader on X, and we try to give a little bit of analytics each and every day when we see something that's worth mentioning. So that being said, all of that jazz being said, I think those are two pretty good swing trade ideas. What I would say about these horizontal support levels is is it the same trade? I would get a lot of that saying, Shane, it's the same trade. You're just playing you're just playing the dollar, you're playing contrary plays against the majors. So could you get burnt if you get a big move out of the dollar? I would say yes and no. There is a risk of that, just because of the typical correlation of the majors. And when the major is the counter currency as opposed to being the base, then you can run into problems with those correlations. But I love the way these are spaced out. This trade right here in the euro US dollar is nothing like this trade in the dollar Canadian dollar. And the reason why is the market drivers. Right now, dollar against the euro is all about tariffs, trade war, yada, yada, rate cuts from the ECB. That's absolutely huge. Now, as far as what we're looking at for the Canadian dollar, going to be a little bit different. It's going to be crude oil in the mix. It's going to be the tariffs and the trade war that's developing between Canada and the United States. Those are very, very different situations. This week could really be entering the golden age of forex trading, where you can treat each one of these majors almost in isolation of the others, just because of U.S. policy towards each one of these countries and regions is going to be vastly different. I love that. That means that, okay, well, the dollar's just not going to go up or down. Well, yes, it is to an extent. But the way that it gets to these destinations is going to be different for each and every one of these currency pairs. So I really believe it's the forex. It's the forex, the golden age of forex trading. Welcome to the Trump administration. Is it easier to trade forex now as opposed to stocks? Yeah, it is. So I always say be careful and watch your risk, but you definitely, we're in a target-rich environment. There's so many markets to trade. Just pick one that you like and trade it. But this right here is pretty good stuff. I love the Euro USD trade. I love the dollar CAD trade. With a bit of luck, I'm thinking this one's going to come into play probably early May. So probably another week. But this could pan out to be a swing trading opportunity, and so could this. Or they could pay you off really quick. Either way, have that flexibility of mind to be able to trade. Don't just get married to one way of trading. We can scalp, we can swing trade, we can do a lot of things. All right, let's take a look at our pet scalp here. We're getting hurt a little bit here. We're down about 5 pips. Once again, with a 1.2, 1.7 pip, now it's starting to run against us. Are we going to get stopped out? We certainly could. It's definitely possible. Good thing we're scalpers and we take a lot of trades every day. But you can see right here, the damage isn't going to be that big. So remember, keys with scalping, risk versus rewards need to be in your favor. You also need to take a lot of trades, and you also have to have that good market liquidity, nice deep market, nice volatility. As you can see, what's happening to us right now in this yen is we've just absolutely flattened out. You've actually seen that crossed back up over and is looking to the long side. I don't trade these crossovers like that. Once I make a cross, I let it play out. A lot of folks, they'll wait, and once they get that crossover again, then they'll go ahead and exit your position and reverse it. You can do that. There's nothing wrong with that. For me, I like to dance with the one that brought me. I'm going to go ahead and go with that market read. And if we go down with the ship, we go down with the ship. That's just the way that it is. All right, let's see. T. Marina, Shane, can you explain what actually happens when you get your margin call? Yeah, that's a pretty good question, T. Fortunately, I haven't got a margin call. What happens typically in futures is you have what's called an auto liquidation, at least a lot of my brokers. Now, there's lots of things you can do to set up risk profiles, risk parameters. You can set up a daily loss limit with a lot of brokers. You say, hey, listen, if I lose this much in a day, cut me off. You can do that. You can also set up a weekly loss limit. Hey, if I lose this much, cut me off. Now, I don't use those anymore. I did for a few years just to try to keep me from being my own worst enemy. They're not bad devices. If your broker supports that type of functionality, that's great. But the auto liquidation, typically, once you violate your maintenance margin requirements, it flattens all your positions and trades. Now, it's a good thing. It can be a good thing. It keeps you out of trouble. It can also be a bad thing because you can get stopped out of trades prematurely and take losses where you should be taking gains. So that's definitely something that can work against you. Now, as far as getting a margin call, like I said, I haven't got one. But I know some guys that have got them. And essentially what happens is the broker calls you and says, hey, we're going to go ahead and float this position. You need to initiate a bank wire, and those funds need to hit the account tomorrow. Bottom line. So let's say I get chopped up in the E-mini S&P 500 in the morning and I violate my margin. Let's say I've got 10 grand in my account and all of a sudden I've got an outstanding position that it can no longer, the maintenance margin's been violated. It will no longer service. The broker's going to want more money to keep that position open. Now, if I'm a good customer and a good client and somebody that they treasure or value, I won't say treasure. I don't think they treasure any of us, but if they value my business, what they will do is they will give me an opportunity. They'll call me and they'll say, okay, you need to deposit enough funds so we can carry this position. Now, this is more common in forex. You see a lot of forex brokers that will carry the positions because there is no real volatility, but not as much as, say, a futures contract. But remember, those maintenance margins are there to protect the brokerage and you, but more along the lines of the brokerage. They don't want to take these huge positions and then have to go hunt down all their clients to give the money to the exchange to make good on the positions. So basically what they're going to do is they're going to call you and they're going to say, hey, you need to pony up the money. That's essentially all it is. And then you got to send the money. And if you don't have it, they shut your account down and then they probably sue you if you can't, if they're showing a net liability above and beyond the maintenance margins, meaning if the firm was financially harmed, they're gonna sue you for the difference. So that's why I always say position size is key. Be careful. Tuesday, Wednesday, Thursday, you guys know what time it is. It's time to trade our plan and build the account. That's what these days are all about. Today, we had durable goods and existing home sales. Those are big numbers. We're going to go over durable goods in just a second. But definitely a key number came out today in durable goods, and it's absolutely huge. So let's get on with it. Durable goods, think about appliances. Think about big ticket items that you're going to buy and finance typically. That's really what we're looking at with the durable goods. We saw a major print today. We saw right there 9.2%. Came in well above expectations at 2.1 and 0.9. So that suggests the consumption is high. Now, if you do a little bit of reading, you can sort of draw your own conclusions. But this right here, orders for big ticket items like autos and appliances surged 9.2% in March to beat tariffs. So the gain is being attributed to consumers trying to beat tariffs. I don't know anybody that went and bought a car to try to beat the tariffs. I don't know that. So I believe I read airliners were a big part of that as well. People buying airplanes, not people necessarily, but companies. You get my meaning there. So durable goods was a big print. This is what I call a big print. And what a big print is one that absolutely shatters expectations in the previous. That's a huge number. You're welcome, Team Marina. That's a huge number. That's an absolutely huge number. So when we get into what exactly it means, new orders for manufacturing durable goods surged 9.2 month over month to $315.7 billion in March, making the third consecutive monthly increase and far exceeding the expectations. The sharp uptick was largely driven by Russian orders for commercial aircraft. Not Russian orders for commercial aircraft, Russian orders. So you definitely want to make that distinction. But this was a huge print. Take a look. We haven't seen anything like this since last July, and it's the third straight build in a row. That's a big-time consumption indicator. That suggests that we are moving higher. That suggests that there is a lot of money going into the system, and that suggests that maybe we're not going into a recession. Now, the financial media sort of poo-pooed that. We're still just milling around here. We're going to have to get on a trade. The financial media still sort of poo-pooed that, and that's okay. There's nothing wrong with that. Right now, the narrative is definitely going to be towards all of this. All these numbers are skewed because of the tariffs and the trade war. So just get used to that kind of reporting. Personally, I think that there's some optimism out there. But, as far as consumption goes on a broad-based metric like durable goods, man, they beat expectations fourfold, 4.5-fold. It's a huge print and a huge number. That suggests that maybe we're not going into a recession. Maybe we are. All right, we just missed our 920 scalp because I was talking too much, but right there's your, excuse me, that's going to go ahead and be your sell signal. We did the 920 workshop yesterday, got a lot of great feedback on it. Right there, RSI was an overbought territory, came right down, 9 crosses under the 20, and you're off to the races here with the YM. Fascinating stuff, great trade. No question about it, great trade. We're moving down. The real question is, we're in an up day. Have we topped out? Has this market topped out? Well, we don't know yet. We've had a lot of good fortune on the 15-second chart. Let's go ahead and try it, see if we can try one again. Okay, right now we sort of have the setup. Now, Shane, why a 15-second chart? number one, I want to place trades and show you guys how to trade these scalps. But number two, we've been making money consistently trading it. It is a 4. It's a factor of 4. So you divide a minute. It's a minute chart divided by 4. What does that mean necessarily? It means it's just going to produce a ton more trades. But it actually is an even divisor of a full minute. And a minute's an even divisor of 60 minutes or an hour. So you definitely, for me, that's a long story, guys. I don't think I need to get into that. But I like even divisors. I always like even divisors. 30-minute chart goes into 60 twice, something like that. 60 goes into 24 hours 24 times. 4-hour chart goes into 24-hour cycles 6 times. I like even divisors. That's why I don't use, you can say a 3-hour chart, but that's why I don't really use odd charts. 15-second looks odd. It's still an even divisor of a minute. It goes back to the fractal nature. That's how I trade. I like fractals. A fractal essentially is when small parts build a whole, and the small parts exhibit a lot of the same properties of the whole. So I try to line things up as well as I can according to fractal geometry. I'm not an expert. I'm not a mathematician, and I'm still a little bit groggy. So my voice is a little deeper than usual. So you'll have to excuse it. But in any case, right here. So what are we on? Well, we got a 15-second chart going. We're on the Y-E-mini Dow futures. We're on an up day. Okay, we're up about 340. Here we're in oversold territory. We've got a nice swing low, so we have an opportunity to trade. The only thing we have to get is we've got to get that 9 to cross over the 20, and then we're going to go ahead and trade it. We're going to go ahead and take a shot to the top side. Right now, we are not there. We're not there. This other 920 trade that we put out, this is more of a swing trade idea that we missed, but I keep coming back to this because this is textbook what you want to see. This is what you want to see out of a 920 daily trade. This is a pure swing trade. Right there was your buy there on Netflix stock. You had some earnings come out. Didn't really help you. Earnings day, really choppy. And then you got the bullish break out of Netflix, and that's a good one. Your bid right there was at 975. Now you're up at about 1,091. You're already up 10%. Excuse me. You're already up about 10% on this trade, and that's sort of what dreams are made of. That's for sure. All right, let's go back to our YM. Okay, there's our move. Now, ideally, what we want is we've got to get a crossover here to go ahead and get our trade. And when we do get it, we're going to go ahead and we're going to buy the market. We're going to send it long as soon as we get it. So we're going to go market buy, but we've got to get our crossover first. That's absolutely imperative. The 9 has to cross over the 20 or we're not doing anything. And this is where the patience comes in. This is where you have to wait to get your setup. Now, we're almost there. What I want to see is I don't want to see the market really break in my favor yet. I want to see it sort of creep higher. I want to get good trade location on my crossover. Now, you can see we're getting very, very compressed. There's a little bit of lag here, but we could get it potentially right here. Now, remember, this is our coded 920. We're waiting for a it's going to be a gold bar. That's going to be our buy signal. So we're waiting. Right here, we've got a little bit of time lag. If you look at the charts, they are lagging just a little bit. That's not necessarily a good thing when you're on a 15-second. Okay, here we go. This is going to be our bid, 4, 3, 2, 1. All right, we didn't quite get it. There's the crossover developing. Now this is going to be our first bar after the crossover. It's in play, but is it? We got to get our signal first, and then we're going to go. 4, 3, 2, 1. Do we get it? All right, there it is. Buy it. Okay, so we went ahead and bought it. We sent it long. Now we've got to wait and see exactly how this trade pans out. You'll notice that these charts, 15-second, there is a bit of a lag there, but we are starting to look like we're on the right side of this trade. Now, we're getting a nice big break. We sent four contracts long, which is absolutely huge. Not really huge leverage. These are only $5 a tick, so we're playing for about $20 a tick. But the real question is where my stop loss and where my profit target's going to be. Stop loss for me is going to be relatively simple. It's going to be the previous swing low. So we got a couple of options. We could go right there with it, or we could go down here. I'm going to play hyper aggressive. I don't want to take a big loss. I'm going to put my stop right there beneath 25. So it's going to be right beneath that swing low, plus we're going to go into the quarter handle. Where's my profit target going to be? Got a couple of options. We can go with market structure, which is right here, the top of this, right? This order block, that's about a 1-to-1 somewhere in there. Or we can go and try to make a little more money. We can shoot for the top of maybe market structure as a whole. Now, if we take that trade, we have to know that we're shooting for about 80 points. We're looking for about an 80-point rally, and we're using a 15-second chart to do that. I don't like that at all. I'm going to bring that right down. We're risking 120.23. We've got a 53 entry. That's about 30 points. I'm going to go ahead and I'm going to play for a 1-to-1 and see if we can't get on the board with a winning trade right there using our 15-second chart. So something like this, we've got our crossover. There was our big pullback. We've got our fingers crossed. We've got a decent market dynamic stepping up. We're just a little bit on the negative side of the ledger. So if, in fact, we do get our bullish bump here, we'll be in a position to make a little bit of money. All right, let's go ahead and put a pin in that one. How's our dollar-yen trade doing? It's starting to come back our way. Now, this right here is why I prefer to keep my stop loss above those swing highs and take my shots. This was my trade right down here. This is what I want to do. I want to be on the short side of this market. Right now, we're behind. If we try to just trade every single crossover after we've already made a trade, we're going to get chopped up. There's just way too much going on there, and that can definitely be a big-time challenge. So I'm watching this one closely. Does it cash out? Doesn't it? Maybe, maybe not. There's a lot of work to do on that trade, though, before we even consider being profitable. We just got to wait and see how it pans out. How about our YM futures? Okay, now we're starting to see a little bit of money come our way. We're seeing the bidders hit the market. A lot of that has to do with just basic price action. Now, remember, what did we do? We bought the 920, and we bought it on an up day. We're up about 380 points on the Dow, E-mini Dow futures, meaning we have a chance potentially to align ourselves with price action using our strategy, which is a 920 with RSI confirmation. There was our crossover. Now we're grinding. We need another 17 points before we hit our profit target. Can we do it? Oh, yeah. Might not even be that hard. We're moving higher. If, in fact, we have an opportunity potentially to get out at our profit target, we're going to take it. And like I said yesterday during the 920 workshop, this is the toughest trading. The toughest trading that you're ever going to do is that last 10% of your trade. The last, right before we're at our profit target. I mean, right now, I was sitting on a $400 profit. I'm right near my 9 points off. Highly volatile market. Starting to come back against me. What do I do? This is the stuff that really gives you ulcers. This is tough. This is exhausting. This is why there's a lot of people that could trade, but why most folks give up on it, because you're right there. You're right there. You're on the doorstep of your profit target. What can I do right now? A lot of folks will say, move your stop loss to break even. Move it up to break even. It's a risk-free trade. Don't worry about it. If you're scalping, I have a problem with that. And the reason why is you're going to get stopped out at break even X amount at the time. And if it's a significant percentage, that means you're going to get stopped out of a lot of winners. And those trades that go against us and knock us out, we're going to take all of those losses. You almost have to stay the course. That's one reason why I shoot for a 1-to-1. We're not looking for a huge move here. We just want to see it hit our number. We're right there. We're 4 ticks away from racking them, what I call racking them. And that means ringing the cash register and walking away a winner, but we're not there yet. Now, this is why a lot of traders, me included, a lot of times on these scalps, I'll have my stop loss down, I'll have my profit target up, and what will I do? I'll walk away. I'll let the thing play out. If my orders are in the queue, ready to go, I'll let it play out. Right now, this is testing you. This is absolutely testing you. Your high was 40,182. Our profit target is 40,183. Now all of a sudden, we're 14 ticks off of that. We're trying to figure out if we're going to go up or down, or is it going to come back and wipe me out? This is a great teaching moment because it introduces the concept of the swing. Look at the swings that we're taking. We go from being plus potentially 500 and something to now being in danger of taking a loss, losing 500. That's a $1,000 swing. The swings, a lot of traders get eliminated because the swings go against them. They pass on racking the money when it's there, and they end up taking the losses. That kind of swing during a trading day can really ruin your day, and it can knock you out, and it can make you hurt mentally, physically, you name it, financially. So you got to watch the swings. If you find that the swings on these trades are too big for you, then you've got to figure out a way to narrow the swing down. Now, that may be just less risk. That may be moving your profit or your stop loss to break even. But the break even is really problematic for you. Take a look at what would happen. I mean, you're inches away from getting stopped out right there, and then the market rallies in your favor. Highly recommend sticking to your guns on these trades and just letting them go. Right here, we look like we're in decent shape, but we haven't closed the deal yet. We're still rotating here. Our dollar yen trade's in big trouble. We already got stopped out. Let's go ahead and let's go ahead and flatten that position. That one got stopped. That one didn't work. So now what? Now we just lost over here. We took a loss right here, and now we're in a position where we just gave back a bunch. Is there any question how difficult scalping is? It's hard. Everybody wants to scalp, but it's hard. What happens if we take a loss right here? Think about the swing. So we've got a $1,000 swing here, and then what happened here? We just took a straight up loss there. Look at this. This is a nightmare scenario. Nightmare. We're going to let it play out. Maybe we win, maybe we lose. Let me see. Kevin Challenger, thank you for the input. Looking like I need to fund a U.S. account. If you want to beat those fees and what you're losing on your CAD US dollar conversion, then you got to figure out a way to beat that. Maybe you go into pounds. Maybe you could beat it going into pounds or something. Maybe you go from loonies to pounds to dollars. I don't know. You'd have to look into that. I would probably just go to dollars. And then right here, okay, we just nailed it. So we're going to go ahead and we're going to close that out. Close that one out as a winner, and we lost on the dollar yen trade. So 1-1. Don't be surprised. That's scalping. That's scalping right there. Really difficult. Excuse my voice, everybody. Very hoarse. Got a pretty good chest cold going. But that right there, that's what it's all about. Now, a lot of traders are going to say, Shane, you should have got some money. You should still be in this looking for the big money payoff. Maybe you're right. I don't necessarily know. All right. Let's go ahead and see what else we can do scalping-wise. I always like to I'm going to give you some of my market reads on gold right before we sign off. I want to see if we can execute one more scalp, and I want to use the 9 EMA strategy with RSI confirmation, and we're going to go ahead and cursor over to one of our favorites, the NASDAQ, E-mini NASDAQ futures. I'm going to go ahead and hide the 20 here, okay? RSI with 9. We're looking at the red right here. RSI, we were looking to sell right there. We don't really have anything that we can really trade there. Not yet. Remember, ignore this. This is just part of our code. But if we're just using that 9, we could have sold right there. We've got to have that RSI. We've got to have the RSI. If we don't get the RSI out of whack, it's really difficult to trade this 9 EMA with any sort of confidence at all. So be very careful if you're just trading the 9 EMA without any confirmation. This one's a pretty good one, a really good example of what exactly we need to get done here. We want to get a short. I don't have a problem with a short, but the RSI has to get into overbought territory. If we do not do that, we're going to have a real problem. We're going to have a real problem getting this job done. So let's go ahead and wait. 15-second chart's not bad. I think I have another layout, actually, that, let's see. Let me get the other layout going. I believe I have a 9 EMA, just pure layout. Right here. Okay, here we go. Here's our 9 EMA layout. We don't want a 5-minute chart necessarily. We're going to go ahead and go down to our 15-second chart again. And we also are going to want to watch, let's see, we're going to want to add our RSI. Absolutely imperative that we get this in there. RSI, please. Okay. Very simple. Very, very simple here. We're waiting for the RSI to get out of whack, and then we're going to look to get confirmation. So if we're in overbought territory, we want to get the price bar to fall beneath the 9 EMA. When we get below into oversold territory, we want a price bar to close above the 9 EMA. And that's going to be our trade. It's as simple as that. That DOM moves around an incredible amount. So right now we need price to come down just a little bit more, and then we're going to go ahead and we're going to be in oversold territory, and that's going to be our cue to look for a buy. Something like this. Not quite there yet. It's going to take a minute. All right, I'm not the most patient person in the world. We're going to give it one more 15-second price bar, and then I'm going to go looking for another market. Okay, let's go find something else. Let's go ahead and go gold. 15-second chart on gold. I don't recommend this at all. I don't think gold's active enough. Gold futures aren't active enough to get this done. Let's go ahead and back off. Let's back off to like a 1 minute here on gold. Okay, that would have been your sell right there. Bang, bang. You got a little bit of money, not much. Let's back off to, say, a 30-minute and see what we have. Nothing really to speak of. We aren't out of whack here at all on the RSI. Let's go to a 5-minute. Okay, really nothing on gold futures with this strategy. Let's take it back over here. Let's go to our 15-second. We should get one relatively quickly, I would think. Oh, just rotation. Right when you need, the market's been moving all day. Let's go to the E-mini S&P 500. 5 minutes. Or excuse me, 15-second chart. Nothing. Okay, well, let's go ahead and, well, I mean, we're right on the cusp of getting one more trade. What are we looking at here? Let's go account history. What are we? Have we made any money yet today? Okay, we made 580 on the E-mini trade. That was a pretty good one. And we lost $106. Let's see. About $206 on our position short on that yen trade. So we're up about 350. And remember, these are demo dollars, but really not too bad of a day for 30 minutes. All right. These markets just aren't cooperating. They aren't really moving for us just yet. Let's see, what else could we get? All right. Okay, I'm going to look at a few market calls, a couple of the levels. We started with the euro and the dollar CAD. Let's go ahead and go to gold. Gold's a phenomenal market to be trading right now. Definitely a bullish read. From 3,500 was absolutely fantastic. Let's see if we got a key level here on the daily. Yeah, right there it is. We already hit this one a couple of times. We wanted really a shot at our moving average, and we didn't get it. Remember, we had this highlighted yesterday. Still, this same Fibonacci sequence will work. Now your EMA is going to be somewhere right around 32.55. That's a pretty good area to bid. So if I was looking to bid, I'd still be looking at my moving average there to be a pretty good downside support zone. If, in fact, we do sell off, this is a beautiful thing down here, 31.71. 31.75-ish is pretty good. We've got our Bollinger midpoint down there on the daily, and we've also got 62% the back end of that golden zone. I really like that, but what we have here today is sort of an up day. We're up about 1.5%, which is a massive move. Yesterday's loss was one of the biggest losses we've seen in gold in about the last 5 years. Let's go to a 4-hour chart and see what's happening. Okay, this is pretty good. This is pretty good stuff, so let's get rid of that. All right, what do we have here? Got sort of a doji, and then we got a nice big break, and we've been trading sideways. So we've still got our 38% level now is back in play. That area right around 3,300 is back in play. So what I want to see right now is if we can get a little bit of convergence. Spike low, spike high, there's our convergence. So in my view, if I was trading gold or spot gold instead of gold futures, spot gold right there, that's a pretty darn good area. 33.01 and a quarter. That gives you an opportunity to trade that zone right between 33.01 and a quarter and 32.97. It's pretty good stuff. I would say that's a great short-term support zone in an area where you probably could go long and do very well. So I'm watching that one relatively closely. Let's see. Do we have anything? Do we have anything on our scalps just yet? Nope. We're not outside of our RSI, so we're going to have to go ahead and let that one lay. Let's go ahead and take a look at U.S. oil here relatively quickly. I had a pretty good market call here. You can see the red zone was just sort of an area of resistance that I had pointed out. That area right in there, pretty darn good. Pretty darn good zone. One that has been great resistance. Now, what happens from here? Let's simplify, make everything easy. Spike high, spike low, a couple of sort of dead weeks. I love my weekly levels when it comes to really anything. But this U.S. oil CFD is pretty good. Top side, 65, 68. That's going to be robust top side resistance. As far as support, do we want to buy? We can. You could buy right there from 61, 65. You can see that's sort of our weekly low. The real question is what can we do maybe right now today if we're scalping? 30-minute chart, it's tough. Right there is sort of going to be your open, traditional NYMEX open, sort of flat, flat, flat. Big doji, wiped out all the intraday shorts, and now you're bouncing. I would say if I wanted a late day trade in this market, I would be looking at the New York session, which this is sort of a rotational trade, but you're in a real rotational market here today. I would be looking to sell right up from here, sort of like a pendulum trade. Those of you that are new don't know what a pendulum is. I'll have to do a pendulum workshop, but something like a pendulum trade up there. Maybe wait for a test and then sell. I'm looking to sell the top side of your U.S. session and then get a scalp right there, or maybe buying right down here on this tail and maybe getting a little bit of a rotation back up toward the center. Very, very flat intraday. Tough to attack U.S. oil with just, probably about 40 minutes left in the session. So something to think about there. All right, everybody, we're going to take one last look at our E-minis, our E-mini stock futures. They're pretty good to us today. Don't have it. We just don't have it. So we're going to have to go ahead and save some scalps for next time. All right, everybody, I want to thank you for joining me. I want to thank you for bearing with my voice. It's pretty hoarse. Hopefully, we're going to get back on the healthy track. Definitely been a chest cold. A lot of folks are sick. I've definitely been one of them. So if, in fact, you're interested in trading any of these strategies that I showed you today, be sure to check out switchmarkets.com. And then also take it easy in these markets. These are big ranges. It was a great question right off the bat from yesterday. He said these ranges are huge. I'm trying to trade the orb, but the ranges are huge. If the ranges are too big for you, stay out. You've got two choices. You can either stay out of it if the ranges are too big, or you can take your risk down to accommodate the bigger range. It really is up to you. All right, everybody, I want to thank you for joining me. Have a fantastic trading session. Be sure if you're in the How to Trade trading room to check out our upcoming stream schedule, which I'll probably have that out later today or tomorrow. Until next time, trade the action well, and we'll talk soon. See you.